Thank you, Michael and Dan. I think we're continuing on a financial tech topic here. Our next guest is Adena Friedman. She is the president and CEO of Nasdaq, the second largest market trading exchange in the world. She oversees the strategy, operations, and finances of Nasdaq's information services, technology solutions, and the corporate client group. And please also welcome back Michael Milken. But I think we're continuing a theme here because Adena is actually a black belt in Taekwondo. So I'm not sure, Michael, why they keep putting you up with all these potential opponents, but here we go.
So part of our discussion today, Adena, is a little bit about leadership. And I remember when NASDAQ was formed, and we were thinking about over-the-counter, what is NASDAQ? And the individuals that we moved into that area were the most undisciplined, unruly group we could find. We weren't sure it was going to work. But we had to find people that were way out there at that time. And when I think today of this evolution that's occurred, where more than 70% of the IPOs today are listed on NASDAQ, take us a little bit. You joined them when you just came out of college, and you worked for the company. Then you took a little sabbatical to Carlisle, and then you came back. But take us a look at how NASDAQ has been transformed. But it's also been a tremendous product of the dramatic change in technology that's occurred.
Sure. Well, thank you very much for having me here this morning, Mike, and it's a real pleasure to talk with you. And I joined NASDAQ in 1993, so at that point, I would say we still had a lot of those traders really focused in on the market. But if you think about it, we were a disruptor in our own space because all trades occurred in a physical building with paper, and suddenly with the dawn of the computer age, we decided to make it a network. And so we had to be brave in order to do that and courageous, and you had to get people who were courageous to come and either list on our market or to trade on our market at that time. So I would like to point out that there are 3 companies that listed on NASDAQ in 1972, which was the first year where we accepted listings, and all 3 of them are in the NASDAQ 100 today. So you have... Are
you going to let us know what they are?
Intel, Applied Materials, and PACCAR, which was a truck building company and still is. All 3 of those are in the NASDAQ 100, but they all at the time were either too small to list on New York, or we're saying, you know, this is a technology vision that NASDAQ has, and we're a technology company, and so let's take this journey together. Today, however, of course, we have $12 trillion of market cap listed on NASDAQ. We have 5 of the top 6 largest companies in the United States listed on NASDAQ.
Is there any other market in the world that has more market cap than you do today?
Well, I would say only our competitor down the street. So we're working on that, though. But NASDAQ
I'm guessing it's pretty close today.
It's getting closer, yeah. I think that we've also been able to switch a lot of companies from New York to NASDAQ. That's also brought up our market cap. But today, NASDAQ is still a wonderful, and we think, the premier equities exchange in the United States. But we have been on a major journey over the last 15 years, really, to diversify and expand our business. And so when we look at our business today, we are a technology provider to the global capital markets today. The technology we use to power our own markets also powers 110 other markets around the world. And we also are very advanced surveillance technology we use to root out market manipulation and nefarious behavior in trading from those wonderful traders that you mentioned. Is used by 50 other exchanges, 18 regulators, and 150 broker-dealers around the world. So we've become a scaled technology provider in the industry in addition to being a market operator. And that's been by design, not by accident.
So this group that we assigned to NASDAQ when it started was everyone that refused to wear a tie. So it's New York, early 1970s, they were sorted out. And now, most people refuse to wear a tie.
That would be true, yes.
So let's talk about the young, growing companies. But today, 4 of the 5 most valuable companies in the world are listed on NASDAQ. So you've got quite a spread of the type of company today. How are you servicing those 2 groups?
It's actually a great question because we are extremely proud of having early stage companies come to NASDAQ because it really is, that is the global dream. So I would say companies from all over the world will come and list on NASDAQ early in their life, particularly in the biotech area, where really the public markets are the VC markets for a lot of biotech companies. I'd say also that we have a lot of IT security companies and other early tech companies, whether they're from Israel, we've talked about, from China, from Europe, or from the United States.
While you're there, Adena, let's talk about countries around the world after the U.S. that are listed on NASDAQ. What country would then have the second most companies listed on NASDAQ?
So the country with the second most listings is China. The country with the third most listings is Israel. And I think that's what's so interesting if you think about the Israeli economy and how they are just an engine of innovation and tech, and particularly in the security space, where they are just an incredible engine of innovation. And they see the U.S. NASDAQ, and not just U.S. markets, but NASDAQ as their market for raising capital. It's pretty amazing.
Let me talk about another area that you just touched on, and that is technology. So if I'm a country or I want to launch a marketplace today, and I go to NASDAQ, how much of your technology that you've built is applicable if I decide I'm Bangladesh today and I want to launch a market? What can you do for me?
Sure. Well, the first thing I would say is we, in fact, have talked to Bangladesh. But so we have technology that is applicable to a startup market, and we have technology that's applicable to the largest markets. And it's on a scale. But basically, we can provide them all of the software they need to establish a trading system, a clearing system, a settlement system, the surveillance to oversee the markets, their index engine, their market data engine, and all of the data that they need to do to manage their business as well. And it's a fully scaled system. The next gen system that we've been building for the last couple of years that we are now rolling out specifically for these new markets is cloud-based. It's a microservice architecture, so you can launch it in the cloud, you can launch it on-prem and ultimately lift it into the cloud. You can have it so that it's blockchain-enabled end-to-end, and you have a data management layer that allows you to manage basically the messaging throughout the trade life cycle in a seamless way. That allows us to be able to go to downscale and to go to smaller markets. So we fully intend to bring new asset classes to a marketplace economy type of environment. Markets in Africa are a great target for this type of architecture, as well as some of our larger markets that want to look at bringing their markets into the cloud. This will scale up and it will scale down.
So, Adena, you're not old enough, but I'm old enough to remember when I had to, in the 50s or 60s, go into, quote, a Merrill Lynch office and watch that tape go across in order to get access to data.
Oh.
Today...
Well, or in the paper, right?
Yeah. Or I needed to get the paper the next morning, but in real time, I needed to do that. Today, if I have a smartphone, and someday maybe there'll be 4 or 5 billion smartphones on the planet in use or more, I can log in and interact. How have you built the technology with this enormous transformation that I can get my information wherever I am in the world in real time?
Well, I think when I got to NASDAQ, it was 1993, so it was really kind of the dawn of the internet, commercial internet, I would say. And so within 2 years, Schwab and Ameritrade launched their online retail platforms, and it completely changed the markets forever. Just absolutely democratized investing. And NASDAQ was absolutely best positioned to be able to accommodate that because we were already a networked exchange and they were a networked investor retail firm, and they were able to funnel their information and their orders right into the exchange, and we were able to send them real-time instantaneous information that they could then propagate across millions of investors. That has just gone to a totally new scale today. So we sell our data and we have many of the retail brokers in China now have our real-time data. They collect orders from retail clients in China, and they're able to direct those orders directly into the exchange, well, through a U.S. broker-dealer into the exchange. We provide our data with 15 microseconds of latency to anyone who wants it around the world. And we have, at this point, hundreds of millions of people who have access to real-time data. Most of them have access to it for free.
So when I first went to Wall Street in the late 1960s, you had fixed commission. If you wanted to buy $1 million worth of stock, you paid 1%, cost you $10,000. Today, I can buy $1 million worth of stock, and if I can't negotiate, someone will willing to do it for $3.75.
Right. Or free, frankly.
Right, or free. And so you've seen this enormous compression in what's occurred in terms of transaction cost in the financial service industry. And as we think about large asset class, debt is the largest, and we're in real estate and then equities. In many other asset classes, particularly real estate, the transaction cost has not come down. How is Nasdaq dealing with this continued drop in transaction costs from that standpoint?
Well, I think first I'll talk about it in the established equities and options and markets, and then I'll actually look at that in terms of how I believe those other markets will change over time and will ultimately follow the same path. So first of all, our transaction costs are measured in millions of a dollar, so we call it mils, or basically 1/1000th of a penny. And that's how much we charge, essentially on average 3 mils per trade or per share traded. So it's a very, very low transaction fee. When I started at Nasdaq, we charged $2.50 a side for every trade. So you can imagine that it's a totally different world today. But the only reason that that's been possible is because of technology and the efficiency that technology has been able to generate, and the fact that you therefore have democratized the entire ecosystem, gotten more people involved, and therefore you're spreading your costs over a lot more transactions, a lot more participation, and therefore the cost of trading has gone way down. But it's all because of I would also say it's also because of the rules and regulations that govern our system that make for, I would say, the most equal and the most egalitarian market that you can look at today in the United States. When you look at the fixed income world, you look at the real estate world and these other markets, it's still very much a professional's game. So retail holders can buy these things, pay a pretty big commission on it, and hold them, but the fluidity of liquidity doesn't exist. The number of assets is just so astronomically larger that the liquidity is spread over so many more instruments. It's harder to create centers of liquidity. But there's no motivation without a central body governing it to say, let's make this more efficient. And so it's taken a lot longer for these other markets to evolve because they don't have the oversight, they don't have the same level of oversight from the SEC or other regulators. But I do think that's changing. I think there are more retail investors wanting to get fractionalized interest in real estate. So you've got blockchain technology allowing for the tokenization of real estate assets. You've got the potential for you to be able to buy a fractional share of a building that never used to exist. You have that in a way that you can do that on your phone. You can do it in a very streamlined and efficient manner. And I believe, therefore, there will be markets that evolve and exist in non-traditional assets going forward because of technology. And Nasdaq actually is partnered with certain firms that are building those markets using our technology so that they can create more efficiency in their markets as well.
I think when people think of a business, and let's go back to the beginning, where you're charging $2.50, and someone told you, well, what you're going to be able to charge is going to go 100,000th or 1/1,000,000th of what you were going to do. Most people would have said, what's going to happen to this business, et cetera, and the challenge. And so I think what you've laid out, many people have different views of Nasdaq and the important role it plays in the world. But I don't think everyone thinks of it as a technology company. And our discussion today really has touched on the unbelievable amount of technology that's the base of Nasdaq. If we look at your workforce today, maybe give us a feeling of who works for Nasdaq.
Sure. Well, before I answer that, I do want to point out, we went through a moment of crisis within Nasdaq because of that shift. We were stuck on that $2.50 a side for a long time as the the SEC started allowing for competition. So we were essentially, think of us as a vertical monopoly in the 90s, where once you listed on NASDAQ, the vast majority of trading occurred on NASDAQ. The SEC opened up the rules and allowed competition. And so we weren't equipped at all. So we went from about 90% market share to about 15% market share in 4 years. And it was because there were so many more nimble players out there that were using the latest technology, distributed architectures. They were using Linux servers, and we were on big giant HP mainframes. And so it was a transformational period for us where we either were going to essentially, we were going to disrupt ourselves or we were not going to exist. And so I just want to say we had to go through that very challenging period of time. And I'm glad I was there at NASDAQ when we went through it, because I understand how important it is now to be willing to disrupt yourself and not to live with the status quo anymore, and to allow for change to be the leader in change, because it will ultimately come. Whether you're ready for it or not, you might as well be the one who's creating it as opposed to being the one who has it done to you. So that is our mentality at NASDAQ. And that then goes to what talent are we able to get into NASDAQ with that attitude and that approach. We are constantly innovating. We're constantly bringing in new capabilities into our architecture team, into our engineering team, and into our development teams around the world, so that we can be that change agent for the capital markets, and so that we can help our own clients, all the other exchanges that rely on us, take them into the future so they don't get disrupted. But that talent is worldwide, so we have 30 offices today. We have tech talents in the US, in Europe, in India, and in Australia. And we therefore are able to distribute that workforce and find talent that may just be a little bit more off the beaten track. We also make sure that we are local with our clients, and so we have local tech talent in Hong Kong and Japan and other locations around the world. And it makes a big difference to be able to bring in the right people. But it also goes back to mission. So it's both that innovative spirit, that willingness to disrupt yourself, and that coupled with a great mission. And I know Dan talked about that, but what we do matters, and it helps form economies around the world. It helps them bring in foreign investment. It helps them create jobs in their own economies by allowing entrepreneurs to find capital. And those things really matter, whether it's here or elsewhere, and our employees really get behind that.
I think, Adena, you really underline one of the keys in successful building a business is being able to disrupt yourself. And realizing your market share is going from 100 to 15 from that standpoint. Let's talk about two other challenging areas of leadership for NASDAQ. 2000 March. NASDAQ had gone to 5,000. Now it's going down 70%. And let's go to 2008, 2009. Two very challenging periods of time that you were at NASDAQ. Take us back to your leadership and your involvement at those periods.
Sure. Well, in 2000, I was running something, the real Wild West, because I was running the OTC Bulletin Board, which is all those traders that first joined NASDAQ when NASDAQ started to establish itself, went over and started trading on the OTC Bulletin Board, which was an unlisted exchange, or an unlisted market, because it wasn't an exchange. And I was running that business for NASDAQ. And I remember my first TV interview ever was in March of 2000, because the share volume on the OTC Bulletin Board was higher than the share volume on NASDAQ. And that's kind of when you knew that we'd hit the peak, because the next month, the market dropped out of the sky. And it was this moment where there was a lot of nervousness within NASDAQ of the companies that were going public. And we had rules, we had requirements. The companies met those rules and requirements and were able to be listed. But we don't take a judgment on people's business plans. That's not our job. Our job is to give people access to capital. It's investors' job to determine whether they want to invest it in those companies. So we would allow them to list, but we kind of knew that, boy, they're going to have to really develop their business model if they're going to have a sustainable business. And that clearly did not play out. So it was actually a nervous moment in the year leading up to that April timeframe. And then it was a, moment of reckoning in terms of resetting ourselves and understanding, kind of rebuilding the base of issuers and the base of investors. And essentially we lost an enormous amount of confidence, and that took many, many years to rebuild. So let's take that now to 2008 and 9, and I would say, first of all, the bubble was existing, frankly, more in the fixed space, in the fixed income space, in the mortgage space, than it was in the equity space. Of course, the equities markets were buoyant then, but it wasn't the same focus area as it was in 2000. But obviously, the extent of the crisis was much worse because it hit a much bigger swath of the economy. So that fear of having some of our largest banks potentially not be there the next day, having some of the core underpinnings of our market be disrupted in a permanent way was very scary. But for NASDAQ, frankly, we were much better positioned to weather the storm. So our earnings did not decline significantly in that period because we'd built a much more sustainable business model by then.
So let's touch on another area. And beginning in the 1970s, I had this focus: could we finance debt for private companies in the public market? And I would say to you, when you look back at the 2008-9 period, the drop of 70% for many of the companies, if you assume that debt underpins equity markets, the fact that I could get extremely high rates of return in debt, I didn't need to own equities. But let's look at the market today. So in 1970, it might have taken 3 months to sell public debt for a private company. Today, it could take a day.
A day. Mm-hmm.
In 1970, you had to pay a substantial premium if you were a private company. Today, no premium.
Right.
As a result, the financing option has changed greatly in IPOs, and the drop in IPOs from the mid-1990s has been significant. So that's the one factor. The second factor is we've had a substantial drop in public companies. And now private equity that has grown time management to ownership from that standpoint and trying to get their utility curves aligned has made private equity, now the large companies, own more companies today than are public. So you're dealing with these issues today on, should I go public, shouldn't I go public, when should I go public? And yes, most of the people go public, go to NASDAQ, but how has this changed in terms as you view financial markets as this has evolved over the last couple decades?
Yeah, it's been a total transformation of how companies get funded over the last 20 years. There's no doubt about it. And today, companies have more choice than they've ever had before in terms of access to capital from private investors, whether it's VC money, angel money going to VC money, going to private equity money. So there's just a lot of capital in the system looking for returns, and they're willing to make big bets to be able to generate those returns. And so that private capital, if you're a company that you don't necessarily have a well-established business model yet, you might not have predictability of earnings yet, you're still growing and trying to, I call it captaining the ship. So you're still tacking from strategy to find the path that you really want to take that'll really scale your business. Inevitably, you're going to want to look for private capital because that capital has the reputation of being patient capital. But once you get to the point of having a sustainable business model where you have more predictability of earnings, and you know that you want to take your business to the next level, and you want easier access, ready access, permanent access to capital, that's when companies tend to look for the public markets. But that's a later stage, and there's some companies who wash out in that stage, they might get bought in that stage, so there are fewer companies ultimately tapping the public markets. It is actually also a more rigorous environment to live in the public markets. We are a public company, but it has made us a much better company over time to be a public company. So I think it's a matter of your readiness to stand up to the rigor, but recognize that you get a huge benefit from it in terms of attracting talent, leveraging your equity to do acquisitions, allowing the average savers to come in and enjoy the growth of your company. That's a big thing to recognize. It's a little bit of a societal effect that if all the private money is owned by all the private equity firms and the wealthy, then the average savers are not given the opportunity to grow their own savings with these great companies as readily. So going public gives them that access. So there are a lot of reasons to go public, but I would say that companies feel a need to be a little bit more ready than they used to be.
So in many ways, people think of NASDAQ. And kind of in closing, Adena, think of it as also democratizing capital, letting anyone in the world invest. And I think that can do added to the idea, even though you're the second largest in the world today, but the feeling of competition that you've brought. And I can't think of anyone else in the world that's had the experience you have growing up and seeing this 99 to 2001 period, the 2008 to 11, but also one of the few individuals that had the opportunity to convince a private equity firm to go public when you went to Carlyle at that period of time. So your perspective on financial markets is quite unique. And I personally, on behalf of Montgomery, who puts on the conference, can't thank you enough for the role NASDAQ plays to giving entrepreneurs and particularly tech companies, whether they're biotech or other forms of technology, an opportunity to grow and serve the world. So thank you for joining us today.
Thank you. Thank you very much.